Welcome to the Fiscal Philosophy YouTube channel. I consider myself to be a value-oriented investor. And while I don't invest exclusively for dividend income, I do love a good dividend, just like the next guy. And of course, many of the stocks I own do pay dividends. There's just something about getting that deposit in your account that makes me go, cha-ching. So what I'm going to do is give you a list of 4 high dividend paying stocks that I personally like. Now, just because I personally like or invest in a stock doesn't necessarily make it the right fit for you, your uncle, your cousin, or anyone else. This is just meant to start a conversation around the stock, maybe give people an idea of something that might be worth a little bit further research on their part, and hopefully perhaps provide some different perspectives or education to people that are new to the idea of investing. With all that out of the way, let's get into my first pick for a high dividend paying stock that I like. This is in no particular order. The first company on the list today is what might seem like an obvious choice. It's Altria Group, ticker symbol MO. They're down nearly 12% year to date, which is driving their dividend yield up quite high. This is a tobacco company, but I think of them more as a nicotine company since they have a lot of different products that deliver nicotine to the consumer in a lot of various different ways. Altria's subsidiaries include Philip Morris USA, U.S. Smokeless Tobacco, John Middleton, Helix Innovations, and Enjoy. Enjoy is the most recent acquisition. It's a vaping platform that they're planning to push out to something like 70,000 different stores, and they expect to be accretive to free cash flow by 2025. Altria's dividend metrics are a dividend yield of close to 10% after the share price has fallen so much this year, with a payout ratio of almost 80%. However, this is actually their goal, to pay out 80% of adjusted EPS in dividends and just to grow it consistently year after year. Their most recent dividend increase was just over 4%, and they have one of the longest track records in the market of raising the dividend every year. They are a dividend king, which means 50 years or more of dividend increases without missing a single year. As a shareholder in Altria myself, I really appreciate the fact that they use a lot of the excess cash past what they pay on the dividend in order to conduct share buybacks, especially when the stock is trading at such cheap prices. Basically, they're rewarding me as a shareholder for just sitting here doing nothing. My stake in the company increases, as does my dividend payment over time. The next stock in the portfolio is a recent acquisition for me. I recently purchased $1,000 of realty income in my YouTube portfolio based on my viewers' votes, and this stock has been beaten up pretty bad along with pretty much every other REIT out there, down over 20% year to date. This is a classic example of perception and stock price feeding one another, because when this thing was over $60 a share, it got basically nothing but praise in the market. After this substantial drop, it seems like a lot of people are struggling to find positive things to say about it. Now, I personally much prefer it at this price than at those higher prices, but for whatever reason, it's much harder for people to be willing to buy something that's recently dropped versus something that's recently gone up. But let's get into some of the metrics on this company. Realty Income's dividend starts off with a 6% yield at today's prices. Their dividend growth recently has definitely been slow, but they do tend to raise it multiple times per year and pay out monthly. The payout ratio of 230% is actually based on net income, which isn't how you would evaluate it for a REIT, and this just goes to show that not every stock can be evaluated in the same way. Based on their adjusted funds from operations of $4 plus per year, their actual payout ratio would be closer to 75%, which is pretty well covered. Realty Income recently announced that they were acquiring Spirit Realty for $9.3 billion. This is a transaction that they expect to increase funds from operations per share by about 2.5%. So it will possibly allow them to continue inching up that dividend slowly. Hopefully, as they add more properties and raise rents, they'll continue to be able to inch that dividend upwards. And, in my opinion, you're not probably going to get stellar dividend growth from Realty Income going forward. It's going to be a % or two here or there. But starting from a 6% plus yield, you could do quite a lot worse than Realty Income. As we head into the second half of the list, I'd just like to remind you to set your phasers to stun that like button, and remember to subscribe the channel and hit the notification bell so you can catch all my videos as soon as they come out. Now, on to the next one. The next stock on my list is Discover Financial Services. Now, this stock is down over 15% year to date, and this has created a really potentially compelling opportunity. I currently only have fractional shares of Discover Financial, but it is on my short list of positions to possibly concentrate into more heavily, considering all the things it brings to the table. Let me show you what I'm talking about. To start with, Discover has a starting yield of over 3.3%. While it's not as high as the first two companies on this list, this does still soundly beat the market. Now, combine that with a payout ratio in the low 20s, which means that the dividend is extremely well covered and, in my opinion, has a very high level of safety. Combine that with a dividend growth rate of 17% as of the most recent dividend raise. This company is the definition of dividend growth. In addition to that, they also offer an extremely low valuation. Discover is trading at multiples that are well below historic norms. Their current PE is in the mid-single digits, only 6.27 price to earnings. Combine that low valuation with Discover's aggressive share repurchasing, as well as the low payout ratio of the dividend, the high growth rate, you have the potential for a tremendous amount of compounding in this company, and you don't even really need to rely that much on any future growth to achieve it. The fourth stock on this list is Verizon Communications, ticker symbol VZ. This stock doesn't get a lot of love. It's down over 10% year to date, and I think, yes, it's boring. You're not probably going to see a ton of growth out of it, but I think it has its merits. Let's dive in. Verizon's starting yield is an impressive 7.5% at today's prices. Their growth, while not astonishingly high, has been consistent over time, and the payout ratio is pretty well covered, 53.5%. Verizon's detractors mostly point out the debt in the company as one of the major drawbacks, and I do agree it is pretty high. Their debt looks more like the debt of a country rather than a business. A lot of Verizon's debt has to do with the tens of billions of dollars they've been spending the last few years on 5G. Now, Verizon is taking a big shot here to be the dominant 5G network. My hope is that having the superior 5G network will mean the potential to capture some market share from AT&T and T-Mobile, as well as the ability to offer other services like, for example, home internet, business internet plans based around the speed of their 5G network, and possibly open up some avenues for growth in those areas. Now, if they can achieve that, then I think it's possible that that investment will pay off and that Verizon will continue to be able to reward its shareholders at higher and higher levels thanks to, basically making those big investments. Now, granted, with all the debt on the books and interest rates being higher, that makes investors a little uneasy, and that explains, partly why the stock is down year to date. There's obviously a little bit more safety for income-focused investors by moving some money into bonds, and so some investors have moved out of a company like Verizon and into bonds for that reason. But I personally think that Verizon being cheaper made it an interesting opportunity. It's not a big position for me, but I do have some shares of Verizon. Thank you for watching. If you'd like to support me, make sure that you drop a comment like Marley drops Titans out of airplanes, subscribe to the channel, and keep watching all my videos. Consider joining the channel, becoming a member, or continuing the conversation with us on Discord, link in the description. Also, catch me every Saturday night, 8 p.m. Eastern Time on Cashflow Kings Live, link in the description.